The term emerging markets was coined 4 decades ago by Antoine van Agtmael. He was working for the International Finance Corporation when he had to name an investment idea that provided exposure to prominent developing nations. Over the decades, the term has been used with various connotations to represent these diverse economies that define a uniform narrative of dynamism, progress, and opportunity. Today, we'll see the top 5 emerging markets to watch in marketing for 2024. 1. China. China is the world's second largest economy and an upper-middle-income country as per the World Bank classification. China's prolonged COVID lockdown and lingering restrictions dampened its growth in 2022. The return of normalcy in the mainland is expected to push its growth from 3% in 2022 to 5.2% in 2023. The growth projection for 2024 is poised at 4.5%. The rebound in its economy is expected to generate a positive spill in the region. China's economy faces 2 headwinds: the impact of the global slowdown on its exports and the weakness in its real estate market. 2. India. India is a bright spot amid global economic uncertainties with strong macroeconomic fundamentals, fiscal discipline, high saving rates, robust domestic demand, and political stability. The government has remained committed to increasing capital spending, particularly on infrastructure, to boost growth and competitiveness. Over the years, the rising middle class and a corresponding shift in spending patterns have strengthened India's domestic consumption-led economy. Its nominal GDP, which is assessed at $3.76 trillion for 2023, is poised to be $5.57 trillion by 2028, which will make India the world's 3rd largest economy. 3. Brazil. Brazil, an upper-middle-income nation as per the World Bank, is the largest economy in Latin America. It is poised to be the 10th largest economy in 2023 with a GDP size of $2.08 trillion, moving up 1 spot from its 2022 ranking. Brazil's GDP is projected to be $2.75 trillion by 2028, making it the 8th largest in the world. The country is home to more than 60% of the Amazon rainforest, the largest tropical forest in the world. Driven by rising global demand, strong prices, and technological advances, Brazil's agricultural production has grown rapidly over the past 2 decades. However, public corruption scandals, political issues, inflation and employment, and income inequality have created structural bottlenecks for its progress, and thus, despite favorable demographics, its growth potential has not been fully realized over the past decade. 4. South Korea. South Korea's journey from a war-devastated nation to a trillion-dollar club economy has been remarkable. According to the World Bank, the policies adopted by the government resulted in real GDP growth averaging 10% annually between 1962 and 1994. However, the Asian financial crisis exposed the long-standing weaknesses in its economy, such as high levels of short-term foreign borrowing, which led to a sharp contraction of its GDP. Today, the country is a hub for innovation and technology. Korea is home to world-famous companies like Samsung Electronics, Hyundai Motors Company Limited, Kia Motors Corporation, and Hyundai Heavy Industries Company Limited. 5. Mexico. Mexico is a land of rich cultural history and abundant natural resources. It is the 14th largest economy in the world and the 2nd largest economy in Latin America. Mexico has made progress in the past 3 decades, but it hasn't been able to achieve its full potential. Mexico's 2% average annual GDP growth rate since the signing of NAFTA in 1993 has been slower than most emerging markets, due in part to its high rates of labor informality, 56%, poverty, 44%, and declining oil production. Mexico's 2023 GDP is estimated at $1.67 trillion, and by 2028 it is expected to reach $2 trillion. Thanks for watching. See you soon in the next video.